Okay, we'll get started right now. I just wanted to thank everybody for joining. My name is Sean. I'll be introducing our host Yvonne, who is an L8 partner at the firm that joined recently in the summer. This is part of our Tax Talk webinar series. It's the second in this series. The first covers transfer pricing. So if that topic's of interest of you, you can feel free to check it out on the Mazars website where the recording was posted. But without further ado, I'm going to hand it off to Yvonne to introduce our panel of Mazars experts and cover global mobility considerations. Thanks.
Thank you, Sean, and welcome everyone. I am very excited to moderate this session, Mazars Tax Talk, featuring global mobility. I hope this is an interactive and fun panel discussion targeted to cover topics that organizations with mobile workforce need to consider in areas of policy, process, technology, and compliance. We also want to go over some of the main global mobility issues impacting companies using two case studies that our panelists put together. And more importantly, I want to share with you all our Mazars approach to global mobility as a group globally. I want to introduce our amazing panelists that we're having for today. We have David Litt from the US. He is our head of global mobility service in the US with over 22 years of experience in global mobility, especially dealing with employer and employee compliance in relation to international employment. David has extensive experience of leading the service delivery of global mobility programs, especially in the areas of mobility strategy, policy, technology, and process. We also have Alexander Ressing from Netherlands. He is the tax partner with Mazars Netherlands, and also he is the acting chair for the Praxity and Mazars Global Mobility Steering Group. With 18 plus years of experience, he advises on all international mobility issues, including tax, social security, labor and immigration law, assignment policies, and related compliance issues relating to movement of expertise across the globe. Last but not least, Joe Pilley joining us from the UK today. Joe is a director and also the head of global mobility service in the UK. He has over 25 years of experience providing mobility services and advice to a diverse range of companies. Joe advises clients and individuals on optimization of assignment planning and the related compensation, and provides the required support to ensure that global reporting requirements are met. So greetings to you all from all over the world. I think the fact that all four of us are sitting together here for this live panel discussion already demonstrated the importance of this discussion topic today, as well as how closely our Mazarians are working together as a team from all over the world. There are four major sections that we want to cover today. We'll start with the basics, get into current trends and issues, then two case studies, and then we will finish with the year-end lookout to 2023. I know all the panelists are more than experts in the area and love to talk about global mobility all day long. But let's focus on the objectives for today and let the discussion be less academic, but more clear and direct for our audience. Later, towards the end, if we have some time left, we will open for the questions from the audience group. Okay, let's get started. Alexander and David, let me first throw in a basic entry-level question. I call it Global Mobility 101. What is global mobility really? I know when I go online, Google tells me it has to do with mobile workforce, right? And move from one country to another. Would one of you please give us a quick overview on this?
Yeah, happy to take that one, Yvonne. And thank you for the introduction. Happy to be here with some very skilled professionals in the field of global mobility. But indeed, the question, what is global mobility? We still get a lot from our colleagues, but also from clients, companies who are less or more familiar with the topic. So to make this very simple, global mobility, it means being mobile on the globe. And if you would like to break this down, I think we have two perspectives. And one is this of you, the company, our client, and the other one is how we perceive it as global mobility services or tax. And I think if you look at, of course, there is a lot of similarity between the two, otherwise we cannot service. But surely the global mobility in a company is basically the function internally that deals with everything that has to do with staff moving to another country, and staff being employees or workers. And of course, not just the moving is important, but also the fact that they are working in that location. We're happy for employees to take a holiday, but it may become more interesting if they're working from that holiday location. And of course, it's not just about tax. It's definitely about thinking logistically. How do I move people to another location? What are the legal consequences? But also, what are my strategic considerations as part of my organization? Does this fit the purpose of the organization? How can we motivate talent? So it's a wide range of topics that are actually involved for those involved in global mobility. And very often, global mobility experts internally, but very often we find it with HR professionals. And for us in global mobility tax, we look at how to manage all of those risks, considerations, and thinking about policies, etc. About risks and areas of compliance, maybe David, you want to jump in?
Yeah, thanks, Alexander, and hello, everyone. Yeah, just briefly, I mean, as Alexander was explaining, this is such a broad topic, and it's you know, global mobility to a company has many different faces, but in our little world of global mobility tax, we tend to focus on these sort of main areas on the screen you can see. So payroll, that's home and host payroll, so often a shadow or a ghost payroll, they're typically terms that are used. Social security, is the individual contributing in two countries? How do you mitigate that to avoid any sort of double withholding issues? Often there's tax compliance, so the actual income tax returns for the individual. There may be some corporate reporting. Employment tax, just some of the benefits that are provided. You know, what is the deductibility, any exemptions, any credits that are available, those sorts of aspects as well. Equity is equally as important, often the sort of forgotten area in some ways, just because it can happen later on down the road, but there may be some trailing liabilities to report at a given time between different jurisdictions. And just an example of something that's very regional in the European Economic Area, just the Posted Worker Directive and all the wonderful compliance that goes with that. But we get involved in all of those areas, and just that, you know, one employee moving up to, you know, hundreds, etc., can create issues in every single one of those areas, and they impact an organization in different ways. Joe, what would you like to comment on that?
Thank you, and good afternoon from the UK. Like Eurovision or something. But when I started doing global mobility, it's so long ago that there really wasn't a global mobility industry at all. Any international employment situations that cropped up that were dealt with as something of an afterthought by somebody very junior in the personal tax team, which was me, where I started off. But over the years, it's become recognised that there's some international assignments, you know, your 2, 3, 4, 5 year tax equalised assignments that were becoming much more common, much more relevant, and needed specialist knowledge to deal with them. These are complex areas, and to be honest, they're also a good source of revenue for tax authorities around the world, and for advisors like us. So the global mobility industry was born and started to grow, and over the years, as it's grown, we've started to see a growth in the need for support relating to not just the long-term assignments, the sort of traditional things, but also short-term and frequent business travellers. Again, principally driven by the focus on this kind of workers from tax authorities and the need to track and report them. Even in a lot of cases where there is no tax liability there, you still have to track and identify the individuals and maybe report them. And then over the last couple of years, really driven a lot by the pandemic and the response to the pandemic, there's been a real explosion of interest in alternatives to those two, more flexible models of working, and sort of remote working and commuters. If you're doing that in a domestic environment, it's not a problem. But if you throw in an international angle, then there's a lot of risks there, as we've heard, for the employer, for the employee. There's compliance, there's reporting, and obviously, importantly, there's some cost implications for that. So that's a long way of answering the question: who's impacted? It's not just the very visible long-term assignees. Those are well known. They've gone through HR. Everyone's aware of them. But you need to think about any employee who undertakes any of their duties in a country outside their regular base. So it's very, very broad.
Thank you, Joe. That's why we're all here today, to have this live panel discussion. And I think this is a very clear intro. And David, Joe, continue on the topics that we are on right now. There seems to be, there are a few pieces to this global mobility puzzle. Companies have those pain points that we just talked about from risk and compliance perspective. How could we, Mazars, help them to manage their mobile workforce? Would you please elaborate a little bit on that?
Yeah, absolutely. So we've broadly have 4 areas we focus on. Now, the compliance is often the go-to piece because everybody goes, oh, there must be a tax return. There must be some sort of, something to report somewhere. And typically there is. But there's often some other considerations to think about this. And first one is really around policy. And as Alexander mentioned, really, what is your strategy? Why have a mobility program in the first place? Who are your mobile employees? Why do you need to do anything? So working out what your strategy is around that piece, and then ultimately coming up with different policies with respect to each of your mobile employee types, for example, and that's just one example, really helps set the scene within the organization of who needs to do what and what's allowed and the reason for doing it. That leads nicely into the process. So once you've kind of said, yeah, we're definitely going to do this, we have mobile employees, how do we make that experience for both the company, the employer, the employee, and potentially the vendor as well? How do we sort of merge all this together to make it a good experience for all? Typically, we look at something called the employee life cycle, and it really depends on the nature of the move, whether it's short-term, business traveler, long-term, for example. But we focus at different tasks in each of the stages of that life cycle, before, during, and after. And we work with companies particularly on their payroll and data. Those are the real big areas before and during, just because getting the right numbers in the right place is really important to report. And that leads nicely into the compliance piece, where we are an accounting firm, a CPA firm, etc. So we do the compliance aspects of people working in different jurisdictions. So that's tax returns at an individual level, even at corporate level. We can do payroll, all those sorts of aspects as well. So all the forms and all the certificates that need completing for the various tax authorities on a global basis. And most importantly out of that as well is the data reporting that goes back to the company to say it's been done. So that's kind of very much a sort of very high level whirlwind tour of how that whole process works together. And Joe, how do we do it?
Well,
no pressure.
Nice easy one on to me. No pressure at all. I think if you focus on that reporting and the compliance need, it's clear that we need some sort of dedicated systems to help to deliver this for you, our clients. If you think about it, a typical cross-border workforce, you've got to track employees' location and their travel patterns. They might have visas that have an expiry date on, or certificates of coverage for social security purposes are going to be lasting for limited periods of time. So we've got to understand when they're going to expire. We've got to have to file tax returns, and it's not just tax returns in one country. We've got to deal with 2 different countries. So we've got 2 different tax returns to be filed, 2 different deadlines to be adhered to, 2 different lots of tax perhaps to be paid or refunds to be claimed. We've got the assignment policies in operation. We need to understand what policies are applicable to which individual within the business there. We've got settlements, tax settlements that might need to be paid to the employees or collected from the employees. There's a lot of information there, and tracking all of this information for 1 or 2 employees on a trusty spreadsheet is maybe not too difficult to do. But you can imagine that as the numbers of employees starts to grow, then that becomes a real challenge. So we've recently introduced some software called Assignment Pro to help us to manage all of these aspects, as well as automating a number of the processes around that employee life cycle that David was talking about, enabling us to communicate more easily and more securely with both the assignees and with the HR teams, because obviously bear in mind that we're dealing with really quite sensitive information here, pay and personal tax returns. So we can communicate through Assignment Pro in a very secure, GDPR compliant way. And I would say the same thing applies for your business travelers as well. There's increasing scrutiny from tax authorities around business travelers, and more and more countries are introducing a reporting requirement. When the pandemic struck, we all thought, that's it, we're out of a job now. But as the pandemic has eased, the numbers of travellers have gone up. The tracking, the movement of employees and assessing the related tax and social security and immigration risks is absolutely crucial for companies. So we've also introduced a related bit of software called Trip Tracker to do just this for us and to help support businesses with the business traveller community as well. Yvonne.
Thank you.
Yeah.
Thank you, Joe. Thank you, David, too. I think this is actually very useful information for the audience, like, seeing the 4 boxes and then, listening to you guys to kind of elaborate a little bit on each of them. And both, as both of you were covering the 4 major areas in global mobility, I'm curious because as I see the current trends, right, global mobility topics become more and more popular in the recent couple of years. And why is this, become such a hot topic to companies? I know before the pandemic, companies focused more on the traditional mobility issues. And now during and post-pandemic, there is this new format of mobility. I call it hybrid mobility that a lot of companies are focusing on right now. Maybe one of you can touch a little bit on this. Alexander, maybe you can help me on this one.
Yeah, of course. Yeah, well, it's a very relevant question. Why is global mobility a hot topic? Well, I think the simple answer is because Elon Musk has been twittering about it, basically saying, well, no more remote work. So I think that makes it relevant by itself. But of course, events we've all seen. We've seen the pandemic. We've seen Brexit. We've seen a war in Ukraine. Events that happen and that affect people. And when people are affected, people will be looking for solutions. People working, but also the people in the companies that require staff. So the limitations that we find in as simple as immigration, geopolitical issues, restrictions, geographical issues, limitations, force us all to look for new solutions. And at the same time, there's also a growing demand from workers, employees, who are saying, we want more flexibility because our lives have changed during COVID, and we actually don't want to adapt in full to a situation that was before the pandemic. And especially in a time where we have massive staff shortages, this is a definite consideration for companies to look into global mobility. So don't be fooled. Global mobility, as you say correctly, Yvonne, is not the typical long-term assignment anymore. It's much more. And if you think that in your company it's not live, well, it is, because there are definitely forms of cross-border activity in some sort that that will impact your company's decision as well. So as you can see on the slide in front of you, we've got a couple of new forms of cross-border work. Remote work, I think, is pretty clear. You work from home for the company where you would normally go into the office. Hybrid working, a good example is both. So working in the office, working from home or another home location. But we've also seen a rise of different forms of hybrid working. And these are just some examples. It's like the virtual hires. Is you have a job and you want someone to execute this, and you have no chance to meet this person. So you just find someone online who can do the work for you online from a distance. So this is really the virtual hire. Also your employee performing the same job, but they never come into the office. And then you have another variety, which is virtual assignments, if you ever heard of that. That's basically you hire someone from a distance, could be a remote worker. But more interesting is that with these virtual assignments, the person is not moving to the job. No, the job's moving and the person is not. So basically, normally you would work in the US, but there is a project in the UK, and I live in the Netherlands, but suddenly I'm responsible not for the US work anymore, but for the UK work, and I'm still here. So this is what we call virtual assignments, and I'm sure this also happens in your companies. What's correct, David already mentioned this. Indeed, well, we thought that the traditional mobility programs, such as long-term assignments and business travel, would stop completely. But we've really seen the re-emergence. Well, we're flying more than ever, it seems, and also there's a need to grab back to those typical programs. So get them from the shelf again. What's interesting when you're changing types of assignments, types of cross-border work, you see this is challenging by itself. And the result is that also for the, I wouldn't say old style, but the way it was before, how we're all trained, also as advisors, but also you, if you're responsible for HR and global mobility. And you see that all these types of work ask more than just managing tax and compliance and legal. As I mentioned at the start of this part, is that employees are asking more of you as a company. You're looking at hiring, retention, and how do you motivate your staff? Well, I think global mobility can be the best example, or one of the best examples to use in terms of motivating and retention. So this also requires a specific role. So we do see companies looking for the chief remote officer or the chief hybrid officer. All names that reflect the changing tasks of global mobility professionals in your organizations. And I was also talking about all these changes. People don't want to move anymore. They want to stay where they are. And the importance of, for instance, the assignment costs, but also immigration restrictions. Also family considerations. Assignees moving and then the family had to join. While the partner of the assignee is also still working, but cannot just move. So how do you meet those demands? And that's looking after, well, a little bit of equity and inclusion, diversity. So being attractive for all sorts of staff from everywhere, from all different cultures and languages. So global mobility can really push this in your organization as one of many tools, of course, but would definitely be something to consider. There's also the other side. With all this flexibility comes a lot of risk, as you've heard, risk and compliance, and a greater responsibility. So although we say, well, you have to travel because this is what we did, and now we have to do it again, there's definitely environmental impact. So this is a strong consideration that also moves companies towards remote working, because that can be a smarter environmental decision in your company. But also the need for governance, make sure that these workers will go to Bali to work for 3 months after a nice holiday or before a nice holiday. How do you keep a grip on them? Because it may trigger obligations that that have been raised before by Joe. And of course, global mobility is the best field to be active in. David and Joe, we can shake hands on that. But we do understand that there are definitely challenges. Talking about retainment and hiring, so having the resources, to be able to manage all of this, to find suitable staff, talents. It's not there automatically. So it's a lot of hard work. Joe mentioned technology. There's a definite continuous need. We're ready for it, but we see the demand for this really one-stop data management. Companies want one solution, go to one place, find all the data on the employees to really meet this governance need I mentioned before. And what will always be is that regulations will change. This is also the reason of our existence, I would say, as advisors. But there will be a new rule in another country as long as we have countries and differences in culture and insights and how we manage businesses. So I hope that emphasizes the need for global mobility.
Thank you, Alexander. I think that's very useful information. And the more you talk about this, the more questions that I want to ask. I'm going to throw some more questions to all the panelists, just from a company and employee perspective, because I hear those questions a lot from my clients. Almost every time when I bring up, the global mobility topics in the discussion, I know the two most common questions that I hear a lot from company employees or executives is, this 183 days, right? Can I spend 183 days in the country? Or sometimes I hear this from companies a lot. Can I work from anywhere in the world? Like, those are the questions that I hear a lot. Maybe David or someone, can you help me on this?
Yeah, absolutely. The myths of working in different countries. I'm going to answer in a very traditional sort of tax consultant kind of way and say yes, but, because that's always the way of starting out can I do this? Yes, you can. You can work anywhere. You can work. You can spend more than 183 days in a country, but, and that's where we'll start. So with the 183 days, this is typically driven off of a tax treaty network, the OECD model, which looks at the number of days of presence of an individual in the other country between two states and between two countries, just so not US states, between two countries. And there's various terms in the treaties, but essentially to get to that point, you have to go through domestic rules first. And those domestic rules could be you're taxable from day one because you're working in our country. And that is, as you're working, we want the tax that's attributable to that particular work day. So just because you're not exceeding the 183 days doesn't mean to say that there's no tax reporting. There may be payroll withholding requirements. There may be social security. There may be all these other aspects that domestically that country requires the individual and the company to report before they can hit the treaty exemption. So, and why is that? Because that is actually important to claim exemption through the treaty. But prior to that, there may be other deductions and credits and exclusions that may be available before you even get to that 183-day rule. So short answer is yes, you can, but always check the domestic rules first for that particular country, because they may require you to do something. The second question, can I work remotely from anywhere? Again, yes, but it sort of falls into what I've just said. Even working remotely in another jurisdiction, there's so many aspects to consider. And just in our space, it's things like, can you work there legally? Have you got the right immigration clearance? Then it's a case of, well, even if you're working remotely, does that mean that there's, you pay tax? Well, probably, because you're working in that other location, and you have all the reporting that goes with that as well, payroll, tax returns. Let's say you go to work in a jurisdiction where there is no tax. You choose, I mean, Alexander's currently on a beach somewhere where there is no tax. The country doesn't have any tax levied, but he's still taxable at home. So he may not have broken residence to exclude his worldwide income from being taxed in his home location as well. So immediately there's complexity between those two countries, just around, is there double reporting requirements, double withholding, etc. So again, always check the local rules. And then this is the last one I get asked quite a bit. How will they ever know? How will the tax authorities ever find out? And that's a really good question, because of course, we all like to think we're some sort of, James Bond type of character that flies under the radar and will never get caught. But actually, the tax authorities are a little bit more, on the ball than maybe we give them credit for. First of all, the country that you're working in may actually legally require you as an individual to report that you're working there, and file tax returns. That's your obligation as a taxpayer. There may be data sharing. Quite a few countries, Canada, UK to an extent, Malaysia, Australia, are sharing data from border agency to the tax authorities. So again, they're looking at, how can we catch or just get the reporting. What are you doing here? Why are you here? Are you paying your way? And then the other big area, there's two other areas that I think. The third one would be audits of a company, and individuals as well. The company is quite easy to audit, something like the payroll. For the individual, it might be, they're seen at the airport. I've got stories where the same border guard has seen the same individual come in and out of the country, and they've stopped them and said, "What are you doing here? Why do you keep coming backwards and forwards?" So again, there's all those sorts of things. And the last one, which I think is we're all guilty of, is that and certainly companies like to announce major events. Tax authorities do check social media, and they do look at newspapers, and they do look at company websites. So when your company says, "Hey, it's great that the French CEO is also just concluded a major contract and spent a year in the UK," what do you think is going to happen when that announcement hits the news? That's quite an obvious area for the revenue authorities to say, is that person reporting their presence here? So all I'd say is assume that they're, the one thing, if you think that you've got a way of avoiding all this, then you're an absolute genius and you should work in this space, because if you've avoided all those sort of things, you don't pay. Fantastic. All these ideas that people come up with have been thought of, and every country has their own rules to follow. And that would be my takeaway from this. Check domestically before you start thinking that you're James Bond.
Thank you, David. I think that makes a lot of sense. And I think, very importantly also, for companies to do the right thing, right, in the areas of global mobility. And I know we, Mazars, we can always help. We're always here to help. Let's move to the fun part. I know we have thrown a lot of information to the audience, and I know, all three of you put together these 2 case studies. I think let us walk through, the case studies with the audience. I think that might be easier for the audience to understand the different pieces that go into the global mobility puzzle. Case study number 1, I think will be covered by David and Joe, talking about US employee moving to the UK. So David, Joe, please take over.
Great. I think that's me again to start off with. Yeah. So
You start off, yeah.
yeah, just this perfect. Right. So in this scenario, what we're really looking at is more of a sort of longer term assignment, so 2 to 3 years, and we'll come on to some of the other shorter term business travel, remote worker aspects in due course. So in this scenario, we've got a US employee who lives and works in California, heading to the UK for 2 to 3 years on a tax equalized policy. And the questions are, what does the individual need to know before they move? What are the US tax implications, and what should the company consider? So those are, as we were talking about before, that sort of employee life cycle. This is the sort of before, during, and after. With respect to the assignee, the individual, the employee moving, and also the corporate responsibilities, both in the UK and the US. So just running down that list on the right there from a US perspective, typically the individual would remain, they're tax equalized, so they probably remain on a US employment contract, and so they'll be entitled to receive their benefits here, their 401k pension, paying to Social Security. We'll come on to that in a moment. But typically, the retention of their employment contract in the US means that they retain their rights whilst they're here as a US employee. From an immigration perspective, I'll let Joe touch on that. From a tax position, a tax status, so what we would look at in the US is essentially, are they taxable whilst they are working overseas? Now, as many of you will know on the call, US citizen and green card holder are taxable on their worldwide income. So there's no escape unless you want to relinquish your green card or give up citizenship. Essentially, you are still taxable on your worldwide income. So there would be reporting of that in the US, and again, we'll come on to that in a moment. That would be at federal and state level. So California has state taxes, and typically you would remain a resident of California state, even though you're working overseas. However, and this is where there is some planning available, California does have some rules, safe harbor rules around breaking residence. So you're only taxable on California, essentially California sourced income up to certain limits. You have to be on an employment contract as well to meet this requirement. But what that does is it means when it comes to things like payroll, you can look at, where are you turning off federal and state withholding, or do you still need to keep applying that whilst that individual is working overseas? Now, the individual is tax equalized, which means what the company is trying to do is hold them to a level that they're no better or no worse off whilst they're working in the UK. So through the payroll would typically be deducted what they call a hypothetical tax, which it would keep the individual at the same compensation level for some of their sort of stay-at-home elements. Some of the assignment benefits they're provided would be the company would essentially pick the tax up on. So they're still getting paid from the US. The US tax may be turned off, maybe some elements being paid, and then the UK would obviously look at the payroll piece themselves. PE wouldn't be an issue in the US. It would be more of a focus on the UK. Social Security, quite an easy one to cover. Anything up to 5 years, you would remain in the US system by applying for a certificate of coverage. There's a totalization agreement between the US and the UK. And then lastly, when we look at compliance, we would look at tax returns in the US at federal and state level. Joe would then talk about the UK one in a moment. And then finally, we do a reconciliation, a tax equalization calculation or reconciliation, which would ultimately make sure that the hypothetical tax that's been deducted from the individual is basically keeping them in that no better, no worse off scenario. So essentially the company is making sure they are whole whilst they're working overseas. Joe, over to you, because it's probably a little bit easier to some extent on an outbound from the US.
Yeah, cool, thank you. Well, the first thing to say is that someone coming to work in the UK for 2 or 3 years will definitely need a work permit, so bear that in mind, and bear in mind the fact that that can take quite some time to obtain. So when thinking about a move, this is the first thing you need to address. I can't tell you the number of times I've seen assignments sort of put on hold because there isn't a work permit there. And that has knock-on implications for the cost and maybe even for the viability of a project altogether if you can't actually get the individual into the country to do the job that they need to. The tax status, the UK has got a statutory test for residents that looks at a combination of the work pattern, the number of days spent here, and the ties or the links that the individual has to the UK. But without going through that in any detail, somebody coming to work in the UK for this length of time is going to become residents here. And the UK domestic rules, as David was talking about earlier, they will be liable to UK tax on their worldwide income. There are some exclusions available if they are not domiciled in the UK. There's a lot of press at the moment in the UK around the non-dom status and whether that's right and whether we should keep it. But at the moment, there are some exemptions available for overseas sourced income. But because the individual's resident liable to UK tax, then we've got a potential problem because the UK and the US are looking to tax the individual. And we've therefore got to look at the double tax treaty to figure out where the tax is ultimately going to be paid. The earnings, which is going to be probably the largest part of largest single element in this, tax is going to be paid in the UK because that's where the work is being performed. That's the rules, and a credit for that tax will therefore be given in the US to offset the US liability on that same income. And of course, bear in mind that because the individual is tax equalised, then it's the employer that's paying this tax over, not the individual. The UK has a tax year that's out of sync with pretty much everybody else. So our tax year ends on the 5th of April. And so matching up the tax paid in the UK with the tax liability in the US, which figures things out on a calendar year basis, can be fun. But that's something that in the UK we're well used to doing because we've got a different tax year than everybody else, pretty much. The fact that there's a tax liability on the earnings means that there's a requirement for the employer to run a payroll to report the earnings. To report the earnings, calculate the tax due, and to pay this over on a monthly basis. Now, the individual is still on the US payroll, being paid by the US. So this is a shadow payroll that we're going to run in the UK. So it's going to calculate the numbers and pay over taxes, but not actually pay the individual anything. The only exception to the payroll requirement is if the employer has no presence, no permanent establishment in the UK. A PE is going to be created as long as there is any substantive presence for the business or revenue generating activity here. And this is really important to understand because there's obviously corporate reporting requirements linked to this as well, corporate tax requirements linked to this as well. So when moving somebody, 2 to 3 year assignment, it's likely there's already a business. You're moving from the US entity to the UK subsidiary or whatever, in which case we already know there's an established a presence in the UK. But if not, then it's really important to address that question of the PE to establish both corporate and payroll reporting requirements. For Social Security, that's easy. We'll get a certificate of coverage from the US that says the individual is exempt from paying in the UK, and if the individual is exempt, the employer is exempt as well, and both contributions remain on the UK side of it. And at the end of the year, although the employer is paying the tax, the individual's tax equalised, the individual still has to file a tax return. Paying tax is an individual obligation. For most employees in the UK, most domestic employees in the UK, the payroll taxes are a pretty accurate assessment of the tax due. And so very few UK domestic employers need to fill out a tax return. But for an expat like this, the payroll is seen as a best estimate of the tax, of the liability. And it's a foregone conclusion that a tax return is going to need to be completed. 2 points to note quickly here. Firstly, the UK has got fully independent taxation. So you're only required to report the assignee's income, nothing to do with the spouse, and there isn't an option. You can't choose to file jointly if you want to. It's just completely separate, and no choice there. And the second is that the UK filing deadline is quite relaxed. Bearing in mind a year end on the 5th of April, we've got until January 31st the following year to file and pay the taxes. And this is often a concern for US inbounds who are kind of used to a much tighter deadline, so that they often get a bit panicky about that. But we have a very relaxed deadline. That said, we will usually aim to file by 31 December instead of 31 January. That way, the UK taxes that have been paid over before 31 December can be credited in the US tax return for the year ending on 31st December. If we pay it after that, the taxes have to wait a year and be credited in the following year's tax return. So cash flow wise, it makes much more sense to get the tax filing done ahead of the UK deadline in time. Yeah, I'm sorry.
Oh, Joe, I was gonna say, I just have one quick question because, we're all talking about, both you and David mainly covered about this case study for, long-term assignment, right? 2-3 years. But what if this is a short-term assignment? Does this make any difference on all the stuff that you guys just covered?
Yeah, I think, yes, good question. I think we have to split it into those short-term assignments over 183 days and those under. David was talking about this myth earlier, and he's absolutely right. You can't just ignore taxes for short-term moves under that threshold. What I would say is, if the time in the UK is more than 183 days, then there's definitely tax due, and pretty much everything I've just said for the longer-term assignment will apply. If a visit is for less than 183 days, then, as David was saying earlier, whether tax is due here will be dependent on a number of factors. In particular, the nature of the work being done, how the employee's costs are being treated by the employer, and so for any short-term move under that threshold, it's something that really needs to be looked at in detail on a case-by-case basis. And that's one of the main drivers for using the trip tracker software that I mentioned earlier. So we've got visibility, and employers have got visibility of these moves.
Thank you, Joe, and thank you both for walking us through case study 1. Let's actually, with our limited time here, let's move to the second one. For Netherlands employee moving to the US. So Alexandra, David, do you want to take over?
Yeah, definitely. I see Netherlands, so it triggers my interest. And I will make it a bit more brief. There are a couple of principles that have been discussed in the case study 1. Tax equalization principle, hypertax withholding. This will apply here as well. We talk about PE risk, same. Will also apply here, and then from a US perspective. But I think what is particularly interesting is that if you look at the Netherlands, we have a residency principle that's much easier compared to the US and the UK. So when you move away, then you're deemed to have left the country and you're immediately not a resident anymore. This is very important for the tax liability of this assignee. And so in the case of a long-term assignment, if someone moves away with the family to the US, he or she will stop paying taxes in the Netherlands. Very, very simple. If residency is not broken, which is more likely in the other situations, short-term assignment, up to 12 months, I assume, business traveler, then the person will remain resident of the Netherlands and will be responsible to pay tax on the worldwide income get a tax exemption for the for the income that's taxed in the US. Of course, for the remote worker, well, there's no Dutch tax or social security involved at all, because this is a person living and working in the US and only has a connection to the Netherlands, potentially via the employer. So this is the Dutch side, and we would also, if you look at the compliance part, in the payroll, we can stop the tax withholding. If there's no tax due, we just put it to zero. Employment law, that will stay in the Netherlands, assuming it's a Dutch employment contract. Immigration is of no interest to us because the person can work in the Netherlands, we assume. Don't forget nationality considerations. We assume that sending from the Netherlands means a Dutch national, which is not per se true. And for Social Security, in all cases, the totalization agreement can be called upon between the US and the Netherlands, and Social Security may remain in the country of origin, being Netherlands, except, of course, again, for the remote worker. That in a short summary. David, US side?
Yeah, thank you. Very short. I'll try and do the same. So it's actually from our side, from the US side, and again, we're in New York on this example. We obviously need to know the visa status to begin with. That can sometimes drive the actual tax reporting of the individual. We're assuming that they're an employee and they're probably on something like an L1, just for the sake of argument. So they'll be taxable here. Tax status is an interesting scenario. So we're looking both at federal and state tax residents. We would look at, there's a US test called the substantial presence test, which looks at the number of the days in the year, and then a third of the days in the prior year, and a sixth of the days in the year before that. So 2022 actual days, there's a little bit more to the test, but basically we're looking at an average to get above or below that magic 183 day level. If you're resident, which we'll assume in this scenario here, then essentially you're taxable on your worldwide income as a Dutch national in the US. So again, there'll be a payroll requirement, and all your compensation, employment compensation and your personal compensation would be reported in the US. There's some planning opportunities around some of that. And the payroll is most likely to be a shadow payroll, a bit like Joe was mentioning on the UK side. Our US side would be a shadow payroll. The individual would have to get a tax identification number. That would either be an ITIN, an individual tax identification number, or a social security number to file a tax return. We'd also check on the permanent establishment issues. What is the individual doing while they're here? We'll assume that they're part of the employee of a company which is already set up and established. At a state level, we'd look at something called nexus, just to, again, if they're the owner manager, are they creating an establishment in the US? So there's all those questions to double check. Social Security would assume they're remaining in the Dutch system, so we just need that certificate of coverage from Alexander and his team to exempt the individual from FICA and Medicare. But do be aware that local payroll taxes for the employer still may be due, state unemployment or state disability, that sort of thing. And then ultimately on the compliance side, there'll be federal and state tax returns in this example. There may be New York City tax as well, depending on the time period that the individual stays in the US at the time of arrival. And in that year of arrival, we look at all of those aspects, the tax residence, to really determine what the optimal position will be for that individual. Whether it's a non-resident return, a resident, or dual status. So we look at the date of arrival. So lots of things to consider. Trying to just rush through that a little bit, but coming to the US, there's a bit more to think about right up front. From a remote work, business traveler, short-term assignment, it's actually very similar rules. So we're looking at, you're present in the US, you're working here. Even with a treaty in place, there's still reporting. The US, the IRS at federal level requires you to file a tax return to claim the exemption. And just one note, some states follow the tax treaties, some don't. So New York does, California doesn't. Yeah. So you may be exempted at federal level, but you might have a state level. So a lot of things to consider there.
Yeah. Thank you, David, and thank you, Lavenda. This is a lot of valuable information, and
Too much.
we have limited time here. I hope the case study, walkthrough are helpful for the audience to better understand the different pieces that we're trying to put together. We're trying to cover today. And I know, David, for some of our mutual clients that we have together, you always do a consultation session, with individuals in the beginning, to walk through some of the key items. There's this checklist that is put on the screen and that we can share with the audience afterwards as a takeaway from today's discussion. We probably don't have time to walk through the checklist in details.
Exactly.
We'll share the slides afterwards. As we are, I think more importantly, as we are finishing up the 2022 tax year, I also want to bring up this discussion regarding things, all the panelists here would like to point out to the companies that they need to do now to manage the mobile workforce risk at year end. And more importantly, as we plan ahead for 2023, what should companies start to think about? Joe, do you want to kick it off on this?
Let me unmute myself. There you go. Yeah. So as I said before, in the UK, we have a filing deadline 31 January. So we've started our busy season already now. We're busy filing. So for me, the year end, it's really a question of looking back, making sure that you've got all the data you need and correct data for the year end reporting. Bearing in mind you're going to have a payroll in the home country, possibly a shadow payroll in the host country. Benefits, different allowances paid in different places. So gathering all that information together is not necessarily an easy task, but something that you need to focus on. And thinking about the mobile workforce as well. First of all, as I was saying earlier, that this covers quite a range of different types of people, the remote workers, the hybrid workers, the regular assignees. So, do you know who they all are? Have you got a handle on all the people that might need some support with their overseas taxes, and for them, then have you assessed the risk? Have you understood what compliance reporting requirements may be needed? So it's a question of getting all that data together, making sure that you've got accurate data, and particularly understanding all those inputs for the tax returns, because those payroll and benefit records are the sort of records that you're going to use to file the tax, we're going to use to file the tax returns, but the sort of things that the revenue authorities are going to look at when they want to come and audit you. So make sure you've got those correct and you're on top and all over those. Looking forward, Alexander, do you want to take that one?
Yeah, definitely. A couple of brief comments into 23. I think we've got given you a lot of material to think about. And this is exactly our goal. So think about, do you have a mobility strategy? If so, do you want to revise it? If not, would you want to think about it, especially for all those new types of working? Think about who is mobile in your business. We often think that only the typical assignees are mobile, but there is definitely a lot more activity than you know. Believe me. So understanding those would be the first step to understanding how to motivate, how you are motivating, but also on the other side, how to manage and mitigate your risks. And I think interesting, of course, budget and taxes are equally important, but do think about the other considerations I've mentioned before. So what about business travel and ESG, for instance? What about your business as a whole? How will global mobility impact the future, not only of general work, but also of your business? That is a couple of closing comments, Yvonne.
Thank you, Lavenda. Thank you, Joe. I am obviously not a mobility expert. My areas of expertise is in corporate tax. But one more thing I would like to add and share with all the audience today is it doesn't really matter what size your company is or how many mobile workforce you have, or if you're currently using a regional firm or big four to handle the global mobility work. give us Mazars, 30 minutes out of your day and have a discussion with us just to hear what we can do with a fresh pair of eyes. I think that would be super helpful for the companies. I work with our global mobility team a lot, and I know it is more than just the three amazing gentlemen you're seeing today on the panel. We also have a whole team, supporting the back in different areas like immigration, payroll tax, international tax, etc. It is not just about global mobility. It is, Mazars as a global integrated partnership that we can bring everything to you together. I'm sorry we're not able to cover all the questions in the chat today, but we'll make sure to reach out to you after the webinar and we can address your questions together. Thank you, all the panelists again, and thank you everyone for joining us today. Have a wonderful day.
Thank you.
Thank you.